Well, it didn't take long for the Canadian dollar Japanese yen to trick us, did it? Stay around and I'll bring you up to date on that. Hi, this is Tim from TradingStrategyGuides.com. I hope everyone had an awesome, productive weekend. Today's trade pick is a change up to a trading range on the Canadian dollar Japanese yen. I'll show you that in a minute. But first, let's take a look at the active trades. And later on, today's trading maxim. Happy Monday! Remember to click that subscribe button and hit the bell so you don't miss any of these great trade setups. Let's take a look at the active trades. Well, McDonald's second position is still hanging around right near our break-even stop, but it still hasn't stopped out, so I'm still in it. The US dollar Mexican peso moving down nicely. Now we're just waiting for the parabolic SAR to get down here below our current break-even stop on this one, and then we'll start trailing the stops on it. I failed to mention on Friday that PG&E Corp triggered last Monday right here, and then it stopped out last Tuesday right here for a small loss, 0.41, which amounts to about 0.5% on the account. I'll look this one over and let you know on Friday whether I'm going to redraw this triangle or not. Royal Caribbean dropped below the ascending triangle that we had. This dashed line right here is the old triangle. It dropped below it right here. Since the volume and volatility were still continuing to decline, I was happy to redraw this triangle. So this is the new triangle, and essentially it doesn't really change anything. We're still looking for a close above 50 to buy. It just extends the time frame out into August that we can actually consider this a valid signal. And that's all for the active trades right now. Let's take a look at today's pick. Last week I showed you this triangle on the Canadian yen. Yeah. Let's try that again. Last week I showed you this triangle on the Canadian dollar Japanese yen. The dashed lines. Almost immediately the price popped right up here, which changed the whole geometry of this pattern. While it didn't quite make it up to 78, the price just While it didn't quite make it up to 78, I still think this should be treated as a trading range. Remember, beauty and symmetry are not necessary for a valid pattern. A trading range is a consolidation with a strong support level, like this one at 75, and a strong resistance level like this one at 78. Price just sort of bangs back and forth between these levels until it eventually explodes out of the range in one direction or the other. I'll take a break of the trading range in either direction. And as a nice confirmation of the consolidation, we have a decline in volume and volatility right down here. Volatility is the amount of daily movement of the price, and I measure it with the average true range, or ATR, which shows the average length of the last 14 candles. Here's the trade plan. We're going to buy a daily candle close above the range or above 78, or we're going to sell a daily candle close below the range or below 75. On the breaking candle, to take a full-size position, we want to see the volume bar reach up to the volume average right here. If it doesn't quite reach the average but does reach at least 75% of the average volume, I will open a half-size position to reduce risk. You can calculate the percentage by dividing the volume number here by the volume average. You should get at least 0.75. If you don't get at least 0.75 on that, I would stand aside on the trade. The stop loss is 1.5 times the ATR, and the first target is 1 times the ATR. So let's say that this triggered a buy right up here. Just ahead of the close, we would enter our order. On that day, we would look down here to the ATR. We would multiply that by 1.5. We would measure that distance behind the entry, and that would be our stop loss. Then we would measure 1 ATR above our entry, and that would be our first target. Now, of course, it would be just the opposite if it broke to the downside. If after entering the trade we got a close, starting that over, if after entering the trade we get a close back inside the range, we'll take our stop right then, and we won't wait for it to hit the stop loss. We'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of the range should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. These two rules are the very definition of cutting your losses and letting your winners run. Typically, I do this using 2 positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my trade. I will only risk about 2% of my account on each trade. And that's today's setup on the Canadian dollar, Japanese yen. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your own mind, that's my intent for the trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, another trip back in time for our maxim of the day. Tim's trading maxim number 58. Our greatest glory is not in never falling, but in rising every time we fall. And that's a quote from Confucius. Apparently Confucius said quite a bit in his day, or at least he was credited with saying quite a bit. Who knows? In any case, I think this maxim pretty well speaks for itself. If you fall down, get back up. If you fall down 5 times, get up 6 times. If you fall down 100 times, get up 101 times. Never quit, never surrender. Enough said. Remember our Canadian dollar, Japanese yen trade plan here. We're going to buy a daily candle close above the range or above 78, or we're going to sell a daily candle close below the range or below 75. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the daily ATR, and your first target is 1 times the daily ATR. And remember to click the link below to the trade management video for more details. Don't forget to sign up for my free Trading Picks email list to be sure you don't miss any of these great picks. I'll send out 2 or 3 trading picks a week from all different markets, and you'll get to see them first. And the best thing about it is it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video or both. And remember, the only stupid question is the unasked one. Don't miss the next installment of the Trading Education series on Wednesday when I'll discuss what is a currency pair. As always, thanks for watching. Thanks for subscribing. Don't forget to hit the thumbs up below. Have an awesome week, and I'll see you Wednesday.